Alrighty guys, welcome to the stream. In this stream we're going to do some Bitcoin top-down analysis. Just because we have lots of volatility here in the market, so I want us to be prepared and have all levels above us and below us just in case, you drop $5,000-$10,000 in one day. We don't have to panic. We'll have levels that we can watch. So let me just get things organized here. We're going to start with order blocks. So we'll look at the yearly. So when you see TY or TM or TD on my chart, that just means it's been tapped before. So this yearly order block was created right here and it's been tapped. We already came through the level. I just like to keep important areas like this because they'll act as support back on the way down. So we can see that there's a clear level of support right around 46,200. Go to the monthly. So let's see. In 9 days, the 2-month candle closes. You can see here when I did top-down analysis last time, we had a monthly order block right here. That order block has now been tapped by this monthly candle. I still like to leave it here because if we only wick this level and close above it, that's a bullish sign, right? So in 9 days, if we close below 108.216, then you could start actually targeting order blocks below. Something like that. So there's no new monthly order blocks. Let's go check out the 2-week. And you might have to pause the stream if you want to get all these levels here. I'm just going through it pretty quick and then we'll add any new levels that we see. So on the 2-week to 4-week, there's no new levels. The weekly, this is where it's important. So we have a very clear level that we can target if the market starts to drop, which is 100,945. So if we start to drop, a really solid target would be the weekly order block here, which is a $7,000 drop from here. So if you can start, depending what style of trader you are, if you start to look for shorts or whatever, if we come back up, or if you look for shorts here, that is a massive, that's 6%, and then if you were to catch a lower high, that's 10% plus. So those are very clear targets for me if we keep dropping. We'll go on the daily. So I usually do the 6-day to the 1-day right here. So no 6-day, no 5-day. And actually the 5-day here, it closes in 6 hours. So if this order block is still here in 6 hours, when the new 5-day candle opens up, this will be a 5-day order block as well. Right where you see this 2-day order block, in 6 hours, if we're above 106,424, this will then create a 5-day order block on the existing 2-day order block. No 4-day. No 3-day. This is the 2-day. So again, a very clear target. Before you target the daily order blocks, we have targets here of 102.95, 100. And this is why it's very key to do your top-down analysis, because you don't need to get emotional when the volatility really kicks in. If you have a daily candle that just goes straight up or straight down, we have very clear levels to be targeting. Okay, this is big ranges. So if we go on the 3-day, I'll get rid of this one here. This one and this one. So you can see every sideways range I've marked out with a volume profile. And in that volume profile, you'll see this orange line. that is what's called a high volume node of the volume area that we're marking. And so the area that we're marking is from here to here. So everything between that, it tells us that the high volume node of this green line to this green line is this one right here, is the yellow or the orange line. So you can see this one, the first time we came down to tap this level, we pretty well bounced to the exact dollar of it. And then we've been struggling to fully lose the level. So these high volume nodes of massive ranges are very important. Once you start to close full body candle closes below this level, to me, this is a easy target too. So we have our 2-day order block, our daily order block to target. We have our weekly order block, which is right between the 2-day and the daily. And then we have our high volume node. So if we start dropping from here, target 1, this zone, target 2, this zone, and you'll keep seeing different targets through this here. So those are daily order blocks. We've done all the order blocks, and this is the big ranges that we're watching. So I've actually marked these levels out. So if we lose 107,483 with full body candle closes, we target the next high volume nodes. And of course we have these order blocks that will be for target 1, target 2, you have your weekly order block right here. But if you're not interested in pulling profits at the order blocks, it would be the high volume node, in my opinion, would be TP1 or TP2. And then I do the same thing as the big ranges, just on small time frames. And these work like very well, guys. This is the last sideways range. Here's the high volume node. And see how we struggled to close full body candle closes above this high volume node here? And now we're back down to this high volume node. So if we lose this high volume node here with full body candle closes, to me it's simple targets of targeting these lows. And I wouldn't even really target this low, I would target this low. We have to watch the value area down here. We potentially could swing fill into this value area. But the main thing is when you lose a high volume node, so whenever you have a range and then you lose that range, you're gonna go down and create another range below you or above you. So if we fully lose this, eventually you're gonna start to create another range. So if we ever start to pump, you have very clear targets, right? This high volume node. Let's say eventually you form a bull div at the bottom here, and then you have your change of market structure. A very clear target is the high volume node of the previous range. So those are small ranges, nothing has changed here. Whenever you're in a current range, I just like to extend it right so you don't have to keep updating it. And then we have supply and demand on large time frames. So if I zoom out, you can see it gets a little crazy here. So this is why I like to find imbalances in these big 6-day and 1-day demand. I'll go down and find like a 1-hour imbalance in that 1-day demand. So just to refine that zone a little bit more. So nothing on the weekly, skip down to the 3-day, the 2-day, and this is what a supply imbalance looks like. I've just started this channel up, so eventually I'll start to make videos going through how to identify them and stuff. So there you have your 2-day. And again, these work very well. Look at where our rejection was. We had our 1-day imbalance. We came right up to the 1-day imbalance and we got that wick rejection off it, right? So even if we start to pump again, this is when you watch for another swing failure because you haven't mitigated any of this supply. You can still come up and mitigate the supply and dump down. You don't need to bounce right at supply or demand It's all about where is that imbalance of volume, right? So are you going to come up just to tap the imbalance, or are you going to fully liquidate everyone that has their stop losses above that, right? Or below that, depending which direction. So nothing new on the daily and above for demand or supply. And then I do the same thing on low time frames. So you can see I've left these ones above because we barely tapped into it. And when we barely tap into it, I'll start to get rid of these supply boxes when we at least come up to mitigate half of it. If we haven't mitigated at least half of this supply zone, I definitely leave it on the chart. So this 8 hour has been fully mitigated. We tapped into the 3 hour and the 8 hour imbalance. Let's see if there's anything above us. Right here. So this is a 1 hour supply imbalance. Now, for an imbalance to be, so how I like to weight these imbalances is based off a range. If you don't have a range that was created, that imbalance, I would say those are like a 50-50. If you have a range that created an imbalance and you see bull or bear divs, you have a very high chance of winning that trade. These ones are a little bit sketchier because there was no range that created this. This was just a straight drop down. So how I would play this one is this is actually coming up to play the fair value gap, and it really doesn't have too much to do with this supply. It would be filling the fair value gap into what would be like a 15-minute range demand, right? You have a 1 hour supply imbalance, which if we drop to lower time frames, not quite a 15. You see how it's just a 5-minute range demand? You have your market structure, and it's just your range demand. So a range demand on a small time frame is an imbalance on a larger time frame. Okay, so we only have that 1 hour. We'll drop a little lower just to see. Okay, I'm going to mark this one as well. And again, these are very like small ranges, so I wouldn't weight these ones too heavy, but I still like to mark them all out. Okay, we'll leave it at that. We won't mark anymore. This is a good example. So you have your 1 hour supply here, and you see how when we keep dropping time frames, you can even refine the 1 hour supply and find imbalances within the imbalances. So we'll mark this just to show the example, but you can actually mark out imbalances within imbalances. So this is 30 minutes. Here's a great example right here. This is a 12-minute supply imbalance. And look where your rejection came, right? They work very well. Now, do they mean to randomly short and randomly long at the zones? Definitely not. Definitely not. Okay. Now we're going to do Fibonacci. So we'll zoom back out. Okay, so let's hide this. Of course, it was the last one I clicked on. Okay, so the first fib I'm showing here, let's actually zoom out to a weekly, is pulled all the way from the bear market lows to current all-time highs, and you can see the golden pocket is all the way down right around 57 to 53. Let's also throw the 382 just so you can see it, which is right around 84,000. This one I don't mind either, the 382, because you have an imbalance. This is a range here. So this would be range demand. So it could make sense if you've seen some sort of bull div at the 382 within the range demand. Something that would make sense too. And then this one, I went from this low. So I kept just going bear market lows, next major low, next major low. So those are the fibs that you'll see right here. Is it pulled from this low, and this low. So we'll just unhide them all. We'll hide these two local ones. So you can see the first golden pocket is all the way down at 94,175. So the first area, if things really start to get bearish on the Fibonacci pools, is right around 94,000. And again, just reminders, we have our 2-day order block, our daily order block, our weekly right here, and then you have high volume nodes, right? So you do have targets here, you have targets here, and then this is a decent target as well, which looks like they're all just super close, but in hindsight, guys, that's a massive 8% dump. From this TP to this TP is another 7% dump. So it looks close when you're on the weekly, but they're massive, massive moves. And then let's zoom in locally here, and you'll see the fibs that are pulled locally. So our last rejection happened at the fib pull from here to here. Your first little rejection, this was at the golden pocket. Your second rejection was at the 786. So we could probably get rid of this now, which we're going to get rid of this because it's just noise. And you can see how well Fibonacci works, because even if we dump through the level, look at where we've been consolidating for the last several hours. If we go down to the 4 hour, since we've tapped it, we've been hanging out for, call it 8 hours, right? So they work very well. Yeah, about 8 hours we've just been hanging around it. So if you see, let's say this is an imbalance, some sort, or a mitigation, people got stomped out, and you see nice bull divs here with a higher low off the golden pocket after grabbing liquidity, that makes perfect sense to then target minimum a lower high, but I would be targeting the actual highs. And I'm definitely not saying that's happening, I'm just giving the example. We'll do some live price action after all this. Okay, so let's zoom back out and we'll look at liquidity. And all liquidity means is where would people have their stop losses. So again, you just got to imagine if you took a trade, where would your stop loss be? If you took a long from here and say you're targeting here, up here, your stop loss is most likely either below this low or below this low. So an example of a liquidity grab is grabbing all those orders, stomping everyone out, and then going to your target, which happens all the time. So that's like a liquidity grab. So we just like to mark all those out. And you'll see on my chart I have them marked out as CDWs. I learned the majority of my trading from a different trader, Jason Casper, and just from the beginning I've been using CDWs instead of SFPs, but they're the exact same. That's what a CDW is, an SFP to me. It just, yeah, it's a different term from him. Okay, so if we go to liquidity, this is the most important one right here, right around 98,000, because this is your last actual decent pull of market structure. This one here, all you did was wick these highs, right? So I don't consider these breaks of market structure. I can consider it a swing failure of the break of market structure, which makes it a weak break, and then you target the previous protected low, which becomes a targeted level, which, sorry, that probably made no sense. It barely made sense to me, so we'll try that again later. But yeah, that's what liquidity means. I'm still figuring out how to do this stream and stuff, guys. So yeah, the first liquidity that I'm seeing to the downside is here, and to the upside is here. So first decent grab of liquidity to the upside is right around 114K, and to the downside it's right around 103,000. One second. Sorry, one sec here, guys. I'm just pulling up the software so we can grab our naked points of control. Okay. So this next file, this is called naked points of control. So you'll see that I have monthly POCs marked, weekly POCs marked, and daily POCs. And what a naked point of control means is after that high volume node was created, you never went back to test that high volume node. So they're amazing targets. Targeting a naked point of control for a take profit or a potential trade zone that's one of my favorite zones to target, is when you have a naked daily or a naked weekly and say a weekly order block right around each other and you're bouncing at a fib. This top-down analysis, doing all these steps, gives you the best chances in these markets. So again, you just have very clear targets to the downside. We never have to panic, right? If we open up our charts and we're down and the market's down 8-10%, we have very clear targets, right? If we just flash crash through here, we pull open our charts, we see we have targets here, open that weekly order block, targets right at that naked point of control is that weekly order block. So let's see if we have anything new, which we actually do. And look where that last rejection happened, right? It came into the imbalance of supply right at the naked point of control at the Fibonacci 786 pole. So all the analysis was already telling you watch for rejections in these zones. So we can probably, let's get rid of this one. Okay. The software that I've been using to find my naked dailies and weekly has been down lately, so we'll try to grab this, but it's so laggy. 110700 is the one that was created yesterday. So let's mark that out. 110700. And then the day before, or a couple days before, 113. And usually I'll get these closer because I'll really zoom into the high volume node, but the software that I'm using right now is really lagging out, so it really doesn't even let me do that right now. So we'll do that maybe on the next stream, which will be tomorrow. Just confirming that we got that. Okay. So again, gives you very clear targets to the upside if we bounce off this local golden pocket here. Let's just say we do bounce off this local golden pocket. If we're watching for lower high shorts, we have this would be the very first area that I would watch for low time frame bear divs hitting the high volume node that wasn't tested again. And then we'll do single prints. So I don't want to zoom too far out because you'll see how crazy it is. I've marked out like all single prints since I've been charting this, so you can see they go all the way down to like 27,000. So let's just look at the closest single prints that will be filled. This one has already been tapped into, but I just left it there letting me know like that's why we did get a nice bounce there. We also filled a single print going into those order blocks. So the first single print to the upside to target is 114,900, and then the first decent pile of single prints to the downside is 98,300. I wouldn't really be targeting this one because it's already been tapped into. I would say these two are your first target for single prints being filled. Fair value gaps. And how a fair value gap works is it kind of acts as support or resistance at the beginning. So when you're approaching that fair value gap, you see how here it acted as just a resistance. Once you start to fill the fair value gap, you usually break through, depending if you're breaking through to the upside or downside, just as fast as you either dump through or pump through. So like an example is this fair value gap right here. An example of what would happen here is you come back up and you use this just as normal resistance. The other one is you come up, use it as resistance for a little bit, and actually just shoot right through the fair value gap that was created here. You usually shoot through it just as fast, right? So fair value gaps are very important of when volume really picks up and when you see like a lot of trend trading starts, right? Because when you start to fill into the fair value gap, you'll have a pretty aggressive trend. So like an example is, let's say this happens, you use it as resistance. When you get that pop, you have like a very aggressive trend, so lots of traders are starting to come in. And then this is when they start to get stomped out, right? And you usually start another fair value gap. So no new fair value gaps on the daily. This is a great example here on the 4 hour. Right here is you have a fair value gap from here to here. And you see right now it's just using the fair value as resistance. When you start breaking into the fair value, again, you usually break through it just as fast as you created it. So if we can't start to break through this fair value gap, there's a really strong chance it's just resistance and we're going to go back for the lows or just keep trending down, right? If we can start to actually fill into this zone, there's a strong chance sometime within the zone, you might just go through the zone at the beginning slow, but sometime within the zone, there's a very strong chance that that volatility picks up and you shoot through. So it will act as resistance only to a certain point, and then when you start to get into it, eventually you'll get that volume spike in it. 90% of the time, in my opinion. I've been a full-time trader for several years here, so I watch the charts pretty well all day, every day, and that's what I see 90% of the time, in my opinion. Okay, so yeah, and then VWAPs. These are awesome. This is what's called an anchored VWAP. So I'll show you a quick example. If we go on like the 4 hour right now, and we want to see where the average piece of volume is for this whole play down. So if you were to take the volume in this whole leg, and I just want to see like where is the average price of that volume. If we pull what's called an anchored VWAP, it looks like this on TradingView. From the high, you see how it just puts that line in for us? So then I'll mark the downtrends in red. And look at how well these work, guys. This is why we do top-down analysis. It's not a guessing game. It's not a guessing game. With proper top-down analysis, you have very clear short levels, long levels. This isn't considered a short level, it's considered a watch level, right? Because you start breaking above it, boom. We weren't able to break above it, so boom. And you can do the same thing even just in this little trend. If you're just curious, okay, look what happened here. Respected the anchor VWAP, respected it, fell below it, and now we're struggling. Like this is such a perfect example. It gave you 3 great opportunities. Now it's letting you know, be very cautious. There's no reason to rush into longs when you're below it like this. You're below this one, you're below this one. If gun to my head right now, I would say for sure you're going down because you're not even above the anchored VWAP of the very local trend, right? So now I'll unhide all mine and you'll see that I just have them, where are we? Pulled from different zones here. So this one we can get rid of. Once one fully gets taken and all that and it's kind of invalidated, I just get rid of it. Let's do a big zoom out. So look at this here. This is the anchored VWAP from the last major low, like the 2-week market structure, 4-week market structure, break of structure here. So this is a major low. We pulled the anchored VWAP and look what's going on. So you know how like social media is going crazy on Twitter right now and people getting emotional. With proper top-down analysis, we don't have to get emotional at all. This is very clear to us. If we can't get above this anchored VWAP, we're going to this anchored VWAP. So everyone's going crazy. Like we don't even need to go on social media, right? This is clearly telling us we're below this major anchored VWAP. Until we can get above this anchored VWAP, to me it's kind of a no-brainer. You're going for your daily or your order blocks first. You have high volume node second, anchored VWAP, very clear targets, right? This is massive. These are massive percents. And that doesn't mean go short the market right now. That just means we're just going through step by step. What is each indicator telling us? This indicator is telling us we're bearish until we can get back above this anchored VWAP. So anchored VWAP is saying bearish. And now this one isn't that important to me, and honestly I barely look at it, but I do the same thing that I do for daily order blocks, monthly order blocks. I just do the same thing on only the 4-hour. You could do the 6-hour, the 12-hour, whatever you want. I just do the 4-hour just to give me another look at when order blocks are being hit. And this one was respected pretty well so far, and you can see that they don't work all the time, but even this 4-hour order block, it gave a rejection of, what is that? It gave a rejection of 3%, so not too bad. Okay, this is market structure, which is hands down, other than risk management, I would say is the most important. So I just started streaming, so I did my market structure a little bit different, so you probably won't understand this, but I'll start to change it now that I'm streaming to make it easier to read. But if we go on the 4-hour here, let's just, or not the 4-hour, the 4-week, let's hide this. Let's hide this. Let's go on the 6-month. So I have this blue box here marked as the 6-month, meaning the last break of market structure on the 6-month was where my blue line ends. The protected low of the 6-month is where the blue line ends on this side. So market structure on the 6-month, we went up, we came down, we went up. This is the protected low, break of market structure. So you can see the 6-month, we haven't even came back into like the support of the 6-month. So we can't be surprised, like very clear targets of just simple market structure. Pull up, pull down, pull up, right? So that's just market structure on the 6-month. Let's go, what was our next one there? Our 4-week. So our 4-week works the same. Let's do a pull. So we came up, we came down, we came up, down, up, down, up. This is the protected low on the 4-week. Very, very important low. So your first important low is this one. Your second important low is this one. You really don't want to lose this low, which is all the way down at 15,000, which I'm really hoping Bitcoin doesn't lose that level. But I would say if you start to lose like 75,000 on really large time frames, that's when I would say you get like several months of consolidation, maybe even a year, maybe even 2 years of consolidation. Okay, let's zoom in again. And the last one was the daily. So you can see the daily I have in this yellow box, because what happened here is on our market structure pull, when we came down and we changed market structure right here. So here, let me draw this in easier. So we came up, we came down, we came up. So right here we had pretty well a swing failure on the daily. Whenever you have a swing failure, you target the low that created that swing failure, which is this. When we came down to this low, we changed market structure bearish. Okay, this is a bearish change of market structure, meaning once the change happens bearish, we watch for lower highs to come in. And then what did we do? So we came up and we came down. But you see how this low wasn't taken? What I just drew here? So this isn't market structure. This isn't market structure. This is internal market structure. So the last daily pull is right here. Until this low or this high was taken, you didn't create any more daily market structure within this sideways range. So what happened when we came back up to this high? We had another swing failure of the high, letting us know that the low that created that is the target. This low created that, which means this low was the target. Okay, and what happened here again? So now what's going on? So this was the target, but what happened again? We had another swing failure. So until you can start losing this level with full body candle closes, all we've been doing is having a swing failure of the level. And again, what is the rule? Once you have a swing failure, you target the high or the low that created it. So if this swing failure holds up, the high that created it is this. If you start to lose those full body candle closes, then this isn't the target. But as long as we don't take the low of this wick, so let me clean this up. As long as we don't take the low of this wick, or even this line with full body candle closes on the daily, the 12-hour, I would say a couple day closes, your target is this, because this is a swing failure of this sideways range. But we have several things that can help us with this. That doesn't mean just randomly long, and just one example of things that can help us with this is our anchored VWAPs, right, of that last example right here, of even just pulling to the downside, right? So you can use a bunch of the things that we went through to help you get entries in, or knowing if it's bullshit or not, right? If we come up and we still can't break this, I would say you're probably going to go back for that low down here. If you can come above this and actually hold it, I would say you're targeting here. If you can come above and hold it, and then we just keep going instead of shooting for the moon right away on this trade, right? So let's say the swing failure lasts. Instead of trying to shoot for the moon and target all the way up here, we have our first, second, and third, right? First we want to break this anchored VWAP, and then we target this anchored VWAP, and then we have a Fibonacci swing failure. So we have lots of levels on that way up that we can start to target if that happens, right? So the 4-hour, and this is where people get really confused with market structure. So this is internal. I just pulled a 4-hour pull from here. Or actually, let's go through it this way. So up, down, up, down, up, down, up, down, up. What happened at the break of market structure? You had a swing failure, meaning this is the target of the swing failure. When we came down here, what happened? We changed market structure, meaning we went like this. After we changed market structure, we went up, creating a protected high. We then continued to break it. So this is the last break of market structure. You can see there is no market structure left in this big drop here. So to even change 4-hour market structure, you have to pretty well go all the way back up here. And this is where if you don't have any market structure for a long time, all we can do is listen to like internal market structure. So you can start taking even more pulls, right, and watching those change of market structures here, watch for a higher low to long to take out, to keep going, right? I'm not going to do the internal pull here because kind of to me it's very clear we're just in a sideways range until this gets taken or this gets taken. Okay, this one's pretty important because this is where I would look for all my different spot buys, meaning where would I add more Bitcoin into my portfolio. So let's do a zoom out, and I want to explain these different color boxes here because this is very important. So these lighter green boxes are what I call spot buy zones if you think this bull market is going to continue. If you think we're going to keep running for these highs, these are where I would look to buy Bitcoin spot for my portfolio. Here, 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 and here. For all the guys that think the bull market is over, my first spot Bitcoin buy wouldn't be until all the way down at 69,000, and then 49,000 and 32,000. So this is very important to me. Whenever, if I'm away or if I'm gone for a few days and I start to see major dumps or major pumps, I kind of have these numbers like memorized in my head of like where's my next major Bitcoin buy. So even if I'm away traveling or something and I'm gone for a month, all I need to remember is 97,150 or even 97,200, right? These are all just things that help. Now we mark out all the divergences. The only one I really want to show you guys is, I talked about this in the stream yesterday, is the really large time frames creating bear divs. And this is really the only one you need to see. The 2 week has confirmed a 2 week bear div and money flow is kind of just flat. So if this is a real bear div, meaning like this momentum isn't just going to start popping up, this is quite bearish because you minimum go hit the protected low. On a bear div, you target a change of market structure. A change of market structure on the 2 week isn't till all the way down at right around 75,000, 76,000. So if this 2 week bear div is legit, minimum I'm targeting the protected low. And usually you target an actual change of market structure. And then we'll go very locally here, see if there's... So you had a little bit of like a 2, 3, 4 hour bear div here. So mark that in red. So the job of any bear div is to take out the low that created it. The job of any bull div is to take out the high that created it. So I would be targeting this. If this is a legit bear div that's going to work, this is the target. You could have even made the argument that this is actually the target. And yeah, if I actually took it, like if I would have entered up here or something, this is actually where I would have targeted because this is the change in market structure. So I take that back. This is actually the target right here. Because this is the low that created it, right? And just so we don't confuse people, up, down, up, double bounce off the protected low, up, and then we formed a bear div. After a bear div, we target a change of market structure, which was this protected low, and we came right back down to it. Okay, this next one is CME Gaps. So I'm not going to explain what a CME gap is right now, but I'll show you how to find one. So if you go on this ticker, BTC 1 exclamation mark, you'll see Bitcoin CME futures. Whenever you see a gap in this, that's what's called a CME gap. So right here, you see how there's a gap in the price, meaning by when Monday opened, there was a gap. And I'm not going to get into it. If this is confusing people, that's all right now. Just look at the green box that I pretty well have on the chart because I have it marked correctly. But that's what a CME gap is. So right here, that what I just showed you is this little box. So the next target of a CME gap is all the way down at 92,000, call it. And then patterns. And I'm not much of a pattern trader, but I just like to mark them out. So this is what I think is like the massive trend line to watch. And then if you really zoom out, you can see this is like a macro trend line. We've respected it most times. And just because you closed above it several times, like these are macro trend lines, right? So this even can keep, like let's say this happened. Because by the time you even come up here, the trend line will, so this trend line could keep working all the way to like 200,000, all depending how long it takes Bitcoin. If it takes Bitcoin, say to 2030 to start hitting some serious numbers, let's just extend this trend line to see where it would be. Just to give people an idea, that's why I like to do this. So let's say something like that. So if you were to just follow up and you think this is the trend line, right? Something like this, right? And let's just say you come back up. You can see even the trend line would be all the way up at 172,000. And that is it for the top-down analysis. Now, how do I manage all these levels? Like, great, we went through all these levels, but how the heck do we, like, no, there's levels everywhere, so how do we know what's going on? This is what I do. I drop to, so I'll have my scalping chart and my trading chart in between me, and then I have this chart, which is my Bitcoin top-down analysis chart, with the levels beside me. Meaning, every time we drop, every time we pump, if we're not even at one of my levels, I could care less. If we're at one of my levels with the dumps and the pumps and things look bullish or bearish at my levels, that's when then I'll go to my trading chart, drop to very low time frames, and then that's when I start scalping because I'm a scalp trader. If you're not scalping and you're taking long-term trades, then you wait for 4, 6, 12 daily closes above or below the levels that we're targeting to then open up short trades, long trades, spot buys in your portfolio, spot sells in your portfolio. So how I do it is, let's say I'm on the 6 hour, is one by one I'll just see what is the most relative levels coming up. So I'll keep that weekly open, the daily. I don't really need this big range right now because all that matters is the high volume node that we're trying to get above right now. I don't need these because I'm very aware that we're at that major P, that's major POC that we've been respecting now for several weeks. Respected it, and now we're just hanging out right at the level, so I don't need to mark it. I don't need to see all that. How I would set this up is like this. I don't need to see this one. Some fibs. I don't need to see the golden pocket because I'm aware that we're there. So the next target for the golden pocket is down here at the 786. If we start to pump, you can also pull a fib from the high to the low here, which we'll put on the chart. which again, this looks like a lot, but you need to remember we're on the 6-hour chart. So this is a 1% pump from here. This would be a 1.5% dump just to the first target. So these are still big moves, 1.5% both directions. Holding above the high volume node, first target 382, then 1 hour supply imbalance, golden pocket. If you think we're just going to the golden pocket because there's another imbalance in there, you target right to the golden pocket, a 3% play. Liquidity, I don't like to have like all the liquidity everywhere, so what I do, I'll usually just put the last few that I actually need right here. So these are the last 4, like these are the 4 closest to me here, 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 and here. And it looks like we have levels everywhere, but these, again, these are massive moves to each of these levels. Naked points of control. I don't need single prints right now. I don't need fair value gaps because this candle in itself lets me know on lower time frames you would have fair value gaps. And whatever you need to remember what's going on, that's just what you keep on your chart. If you need to keep the fair value gap on your chart to remind yourself, 100% keep it on. I don't really need this anchored VWAP. And really this is all I need right now. So what I would do is I would put this chart on the screen beside me, and then I don't need to get emotional at all. If we're starting to see massive rejections or massive pumps nowhere near any of my levels, I don't trade and I barely even look at the charts. If we're having pumps into my level, dumps into my levels, I'll sit at the charts, go to my lower time frames. Is there bull and bear divs? Is money flow starting to turn? Is there lots of trap traders? Is there bullish CVD with traders coming in, bearish CVD with traders leaving? Through all my live streams, I'll start talking about all this stuff. So I know it takes lots of time to watch these, but I'll give tons of value throughout all these live streams to come. So this is really all we need for our top-down analysis chart now. So really, let's look at live price action for a bit. Just give me 1 second. Okay. So I put that chart back to the left of me so I can see it at all times, and now I have my trading chart. So if you watch my stream yesterday, I gave 3 scenarios when I got off because we are at a very key support level, which was right here. So I said spring here, go down 1 more time to form a bull div, or we're going to tank right through and fill all this fair value gap. And we did the 3rd scenario, the short scenario. So I can get rid of that. Let's just mark a couple things out. Just let me look at it for a little bit here. Okay, we're right at the high volume node, so I'll look at this even on lower time frames, but this is definitely, these are definitely areas of resistance. If you can start to reclaim it, they'll probably act as support and you'll run up to this next supply zone. If you can't reclaim it, I would say you're running to this demand zone and then probably this low and then this low, hit the box. Okay, let's see, was there any thing on these higher time frames? Okay, a little bit of a div. So right here we do have a bit of a divergence. We'll see how we can weight this. See how much the money flow is just dropping off here. So you do have this bull div, and on the 12-minute money flow actually looks like it was increasing. So we want to see if this doesn't start opening up bearish, then I would say you're going to start rolling over that way. Sorry, one sec, guys. I just want to update this a bit more. Let's pull another anchored VWAP. Don't need that one. Let's pull a fib from the low to the high. We don't need the golden pocket anymore because we're where we bounced there. Let's grab the couple levels below us from our session that we just did. And this is why these sessions are important. Very clear targets to the downside. Let's put the first level to the upside that we would be watching, which is the 382. So first level to the upside, 109,500. First target to the downside, 106,424. Major moves. All the way down is 1.4%. All the way up is pretty well exactly 1.4% as well. So those are that. Let's do now from this local low to this high. I'm assuming we bounce right at the golden pocket. Yep. Leave this 786 on the chart. So we have a more local target. If you can't reclaim this local POC and you don't feel like shooting all the way down here, this is a very clear target zone. If that's a real golden pocket bounce and it's going to work, let's pull a fib from the high to the low. It would really be here because the other golden pockets were tapped into. Okay, and now we're very local. Let's see, 2 minute, 1 minute. Okay, so the 6 minute is saying more downside. The 5 minute is just flipping green RSI, and money flow is kind of just back and forth on the 5 minute. So 6 minute says lower, 5 minute says we could go higher or the low is we could go higher or the low is close. The 3 minute is saying we could go higher or the low is close. Same with the 2 minute. And the 1 minute is kind of just right at the zero line. So now we can look at my continuation strategy here. Our 2 minute is red money flow giving us a red dot, meaning we're allowed to listen to the 3 minute. If the 3 minute is also doing the same, we're allowed to listen to the 3 minute. Right here, the 3-minute is giving you a continuation signal. So this is where you have a clear signal for the short that if this short doesn't work, you're probably going to start to target all these levels up here. If this continuation short works, the minimum target is the low that created it. This low created this high, which gave you this 3-minute continuation. This is for sure target 1. So right here, just going on the charts quickly here, this is first make or break. You got your continuations on low time frames starting, but look what the 1 minute is doing. You see how the 1 minute is starting to round green money flow? So if we drop really low time frames, you'll have, this is where it's the battle zone. We have the 15-second and the 30-second and the 1 minute all against the 2 minute and 3 minute bearish money flow. Right? So how do we know which one's going to win? Let's zoom in a bit more. Okay, 5-second can flip whenever, but money flow looks nice. 10-second, the RSI is starting to get wider, meaning we're starting to see the purple more. Money flow is green, which is still nice. 15-minute, 15-second. Let's see. This 1 minute trigger is make or break right here. So if this 1 minute trigger hits, it would be your 3-minute continuation signal versus your 1 minute continuation signal. And I know that sounds a little weird, but it's just very key right now because we're at the VWAP. So we've been rejecting and reclaiming the VWAP kind of all day. Reclaim to get people excited, reject from it, reclaim it. Can't get above that POC yet, right? I'll get rid of this one because we didn't do that live together. So we don't care about the 1 minute because, well, let's see here. 15-second RSI just flipped. 10-second RSI looks pretty good. 30-second RSI is saying we're going down. That's what the 30-second is saying. The only thing that we really want to watch is if the 15-second starts to open up. If this 15-second, meaning right here, so if it starts to open up like this, you see how we can start seeing the purple RSI? That's when I would really start to watch that 1 minute continuate, like that 1 minute dot that could be coming in. So this is the 15-second. But if we can really start to see this 15-second purple RSI, and then you have that 1 minute and like the 2 minute dot coming in or whatever, that would be a good sign that it is for sure make or break. If this doesn't beat up on the other, then you're going to go down and continuation short. You're going to take the low of the day or take the low of the previous market structure poll. So they haven't quite opened up yet. You see just how like they're right on top of each other right now. What's the 1 minute doing? 1 minute hasn't printed the dot yet. Money flow looks like crap, but it's kind of just zeroed out. So this can easily flip back bullish if it wants to. If we're not above the high volume node, things are definitely more bearish than bullish. Definitely. If we can't reclaim that high volume node, I would say 99% chance we're going for the lows. And a lot of the time, okay, it's opening up. So this RSI is starting to open up right here, and you're going to get your 1 minute printing right now. So this is make or break, bulls versus bears. Bulls versus bears. So the 3 minute continuation to the downside versus the 1 minute, like this is a little bit of a trickier trade to understand. especially if you listen to my strategies or you join the Discord and you'll see my 2 or 3 different strategies I use. This is a little bit of a different one, but it's fully because this is a make or break level like this. Kind of exactly like this. That's exactly what we were looking at, because look at how the volume, oh, one sec, where did that go? Oh, one sec. This is why it's so important to have strategies that can help you with timing and knowing make or break points. You have your 3-minute continuation short versus you knew this was make or break point. The strategy itself was telling you that. So are you going to start to grab this liquidity? And just remember, this is very low time frame scalping. If we're zoomed out, and let's just do the zoom out approach here. If you're just zoomed out on the chart on the 30-minute, to me, the only thing that you don't even need really any of this. I would just leave this. If you're just zoomed out or you don't have time to look at the charts more, the only thing that I would care about is staying below this anchored VWAP, we're dumping, getting above the anchored VWAP, we're pumping, staying below this high volume node, we're dumping, getting above the high volume node, we're pumping. So if I was at work or something or away, I would make it way simpler. We're just going really low time frames just for the guys that are watching the charts right now. What's going on here? Also, just for the people that are going to keep tuning into my streams, whenever we go through scalps, they are very clear stop losses. So whenever I give like a scalp setup, your stop loss would be to the low or the high. So like, let's say, this is just an example. Let's say we dump down to here and we see like a very low time frame bull div, a bounce at the golden pocket value very low, things are looking good, and let's say we take this. Our stop loss is not below even this, it's below this. You can target, you could put your stop loss here, but this is like how I can kind of scalp pretty well every day, because let's say I got into here, I have such a tight stop loss that all I gotta do is target a lower high. So let's say we do dump from here and this happen. You see how we could still reject in like a massive downtrend and I could still win along? So for these scalp trades, I'll try to remind everyone, but this is how they would always be set up. So if I'm talking about something, the stop loss would pretty well be right above or right below that level. We'll get rid of the 200 moving average right now. Again, the only thing I care about is the high volume node. Below, if we can't reclaim bearish, we can reclaim bullish. So if you're looking for a trade, if we can stay below, I'd be looking for a short trade. If we can stay above, well, let's just do a little zoom up. What would I even be looking for? Yeah, I would be interested of looking for a long after. I would kind of look at both directions honestly today, just because this is such a major POC that if you start to lose this POC, you're going to see a pretty big dump. If we can like hold the POC, I see no problem of going higher. So I would be interested in actually both directions. We can pop to low time frames to see what it's saying. This is the only one I don't like. This is exactly what happened yesterday in our stream, and we were very patient throughout our stream. There was tons of scenarios, tons of trade setups that you could have taken, but I kept calling them D setups. Is all these RSIs green, green RSI, green. Well, that just flipped red, but green, green. You see how every RSI of the 6 that I have is bullish except for one? This is when you need to, if you haven't taken a trade or if you're on a losing week, definitely do not take a long or a short when you start to just see massive separation in both. And what I mean by massive separation, the 3-minute has a massive, the purple is well above the green. The 30-second, the red is well below, or sorry, the red is well above the purple. So completely opposite, and they're very close time frames, which means either sideways ranges or the other one is going to start beating up on this one. Hopefully the mic hasn't been too loud this stream again. Still trying to figure that stuff out as well. So let's see money flow. Money flow in the 1 minute is like slowly kind of curling up, but it's just more zeroed out. The 2 minute is, yeah, nothing. Right now I would definitely be short versus long. It's the high volume node. If we can reclaim the high volume node, I would be looking for longs, but until we can reclaim that high volume node, I would look for this low to be taken out. This 1 minute tells you a lot right here. When you see like this big separation kind of out of nowhere, this is telling you that this is either going to be invalidated or this will be the start of these getting very bearish. So this will either cross back up, or they could start to give you that separation, letting you know to watch for that short and then go. Again, the things that I don't like is look at all these different RSIs. They're going so back and forth right now. And that's why instead of trying to force a trade, we're scalp traders, so we can find that trade today. Even if we don't start trading until 4 o'clock in the evening, we can find the trade. So these are the times I would just be patient. There's no reason to there's no reason to try to force a trade here. So just use the high volume node, and just remember that we had that 3-minute continuation, and then you had your 1-minute decision. So you had this 3-minute short versus this 1-minute decision. And just to show again, is that the 3-minute? 3-minute short versus 1-minute decision created a sideways range until one of them is about to win, either ch or ch. One will win, right? It let us know that they were talking it out, see who's gonna take it. Right at this high volume node, decision time. If we break the high volume node, target this daily open, the weekly open. If we can't, target to take this low out. There's a little bit of supply here. And the last two streams I talked about this, but these aren't random like short levels or long levels. These are where the supply or demand imbalance is. So I have reject here, flip into support. It's not like it needs to flip into support at this area. Once this level is fully mitigated, all this is created into range demand. For the most bullish breakthrough is if you mitigate this and you you don't even really need to consolidate, but if you break this and you don't even really start to take back this support, that's usually when you get another big spring up, because a lot of guys would be trying to feed into a short position, right? And the 3-minute continuation was still this high, and the 1-minute decision was happening here. So it gave you decision versus decision, sideways range was created, battle versus the high volume node. If you break the high volume node, target daily open first, which would also be a swing failure of this level, then target the weekly open value area high. Okay, we're starting to reclaim the high volume node. Very, very critical. You're in supply. If you can fully mitigate supply, we can drop to low time frames to get an idea. 10-second bearish, bearish, bullish, bearish, bullish, bullish. So the closest ones are not necessarily saying bearish, they're just zeroed out. So whenever things start to dump, this could easily, like the purple, just easily separate. So we want to start to see, when are these ones, the ones that aren't bearish yet, when are those going to get bearish? Or when are we going to come down and this is going to get bearish? So let's actually put the VWAP back on, because the VWAP is very important. So we're high volume node VWAP. How do we know? Right here. So this 30-second is key. 30-second is key. Let's see. Because we're still just grabbing it. You can have a massive wick off this. This could be mitigation. So still just watch. Still just watch. Two-minute money flow is rolling over. One sec, guys. Okay, sorry. Okay, the 1 minute you're starting to see a bit of separation here. Let's go to this one quick. This is decision right here on the 1 minute for sure. So another decision point. Let's put a line through it right here. This is the, if this starts to get taken, so right here, if the bulls start to beat up on this, they're really going to start invalidating a lot of things. Money flow on the 3 minute, the 5 minute, the 6, 7, 8 will slowly start to turn. So this is for sure, this wouldn't be, this would be just yellow right now, decision right here. So how do we know if this is going to happen? We would go really, really low time frames. Is the 5 second opening up? See, the 5 second is as well. So this is where we would watch for a lower high if one was going to come. If a lower high was going to happen, this is where we would watch. Okay, no lower high. Back out. Do we have a bear div of some sort? Potential 15-second bear div at target 1. 10-second potential bear div, open up. So the first confirmed bear div right here is your 5 second. Your 10-second, let's see if your 10-second confirms. So we're going to mark out where the bear div confirms. Oh. And all of these do, so I'm not saying short or long. All I'm saying is every time you get a decision time, that lets you know, like, if you don't get the reaction in the direction that the signal is saying, you target your next level to the upside. If you get your reaction that the signal is giving, okay, bear div confirmed. So this would be red. So it's the bulls above the high volume node versus the bears. Who won the battle last time? You had your 3 minute continuation versus your decision point. And these are scalp. Like if you were to take these are scalps, and you can adapt as fast as you want. You can react as fast as you want. If you're in a crazy bullish trend and you take a high aggressive scalp short, that stop loss might need to be moved to entry immediately because you're taking a very aggressive short. And an example on that, let's say we got in here. We're not targeting, we're not stop loss to the high. Remember my comment before, your stop loss just above what you think is the high or low. So maybe you put it a little bit above the daily open or something, but just at the high volume node right here is a 3-to-1. So wherever you want to target, did you target a change of market structure? Are you trying to get greedy with the trade and actually target lower? Are you saying this is just a spring off the high volume node, so you were just targeting a 2 ratio? Maybe a flash closed it now because you see the bearish or the bullish confirmations. Maybe you're like these are just all the different scenarios of scalp trading. Scalp trading is very intense. You need very fast reaction times. You need to be able to stay, not let your emotions take over, right? Never move your stop loss to entry too quick on a position that you feel very confident in positions that are D setups, and then you start to see the reversal signals going against your trade. Those are for sure stop loss to entry trades for me. On an aggressive one like this one for sure is a stop loss to entry for me because we're above this high volume node. As long as we don't lose the high volume node, we're going to come take this high out. So we'll mark it out again. If we lose this, bearish. As long as we can hold this, we're taking this high out. So I don't know how you wanted to play that, and we're not gonna, we'll just hide this. And then I'm just getting rid of like where we talked about an idea. I'm just gonna hide those right now. But we showed the setup of where the setup for the short was, and look at the timing of it, pretty good. Okay, we're back down to the high volume node. How do we know if we're going to bounce at the VWAP and high volume node? We drop time frames. The 1 minute is saying we're not going to bounce here. The 30-second is saying you need to wait for a green dot minimum before we even have the chance to pump here. The 15-second is saying we're dumping. The 10-second is saying we're dumping. And the 5-second is bleeding out, but your RSI is flipped. So the main one for me would be your 15-second and your 30-second. If your 15-second green dot and your 30-second don't take you for the high, that's a very clear sign that a reversal is happening locally. Now remember, that would be a reversal happening on the 30-second and 15-second. So you could just stay bearish for maybe 5 minutes, and that's what it is. If it was the 15-minute, maybe you have to stay bearish or bullish for 5 hours, but it's the 15 seconds, so. Again, just wait for that 15-second dot. This is where we don't even need the chart, right? All we need is our strategy. So the 15-second just confirmed, meaning keep your eyes open. The 30-second can confirm at any moment. If you were in a short, this is where it would make sense to start looking at putting a stop loss to entry, because it's kind of make or break. If you pulled, say, a take profit on that short and you're up money regardless if your stop loss gets hit, let's say you put 1% risk on the trade and you just hit a 3 ratio and pulled 50% out, you would have realized 1.5%, and then there would only be 0.5% still at risk. So even if your stop loss gets hit, then you would still be up 1%. So you could play it a little different if you pulled it, or if you pulled the TP, or if you close 100%. So we're waiting for this 30-second dot. Okay, so here's the 30-second dot. This is make or break. So this is like for sure make or break for the bulls versus the bears right there. Now this is where you would watch, is a lower high going to come in? And this is where scalp trading can be intense. You might have to react really fast. Depending if you were interested in this high volume node, You're saying if we see a bearish sign at potentially a lower high, I might immediately have to move stop loss to entry. And how do we know if that's going to happen quickly? Because this might react fast. So your 5-second is saying potentially. Your 10-second is open up, giving you the dot of where the lower high would happen if it happened. Your 15-second, the 15-second dot, this is where it's make or break. The bull versus here, so your 15-second dot. Right here, this is decision time. This dot might disappear. So if it disappears, I take the line away. But if a lower high is going to come in, it would make the most amount of sense on the RSI dots coming in, like the signals with the RSIs matching. It would make sense that it's there. And scalping wise, if you know your trend, whatever way you're trading, if you're at a rejection zone, and that's where our top-down analysis chart matters, this is when you would know you didn't take both. This is when you would know, okay, did I want to take the long, or did I want to take the short, or did I want to sit on my hands? One sec here, guys. Okay, sorry, I'll be right back. Okay, I'm back here. The cool thing that I like about scalping and having these strategies and stuff is, let's say you've taken every single line that we've talked about. So loser, let's just say loser because we talked about it here. So let's say you had your stop loss and you actually lost it here. This one you might have won and you probably actually would have won it. But let's just say loser. This one right here is a winner. We showed the example of how it would have looked, which was that. This one here is a clear winner too. And look at the ratio on these guys. That's the thing. Like if you have your, here one sec, because I shouldn't have put, we should be putting check marks here. Loser. So right here you have 3 losers, 2 winners. So this loser, let's say you even pulled this one at a 2-to-1. You wouldn't have. You would have been targeting the high volume node. The high volume node would have gave you a 3-to-1, but let's just say you targeted a 2-to-1. On this trade here, right here, we gave when the signal flash, which was right here. So let's say we even got in a little later on the candle flash, which would have been right here. We've made it clear that the stop loss just goes below the last low that was created. And if you went to even just the highs, look at that, that's a 4-to-1. So let's even just say they were both pulled at 2-to-1s. And my minimum target, guys, is a 3-to-1. So this is not even a scenario for me. But let's just say. So 2%, 2%, 4%. We lost 1% on 3 trades. That's 3%. 4 minus 3, 1%. We're still profitable 1% minus fees if everything was pulled at a 2-to-1. And that's what I find is pretty cool about all this. And I think I can provide lots of value for you guys. Okay, so let's get rid of the idea one. The high volume node, again, is the only thing that matters to me. Let's see if there's more imbalances. No, so we're starting to create a supply imbalance above us. Lose the high volume node is bearish, remember. YouTube supply. Let me just see here. I think it's time I could probably wrap the stream up. Even of those few ideas, again, if you took absolutely every single one of them, you would have been profitable. You wouldn't have taken every single one, and for sure if you took those shorter that long, it wouldn't have been a 2-to-1 ratio. It would have been more like a 3, 4, or even like a 5 ratio. So here was all the kind of ideas that were gave. Here are the levels that we have remaining. So let's just put on what's needed. Okay, so I might do another stream later, but what I'm saying as of right now is if we can reclaim the high volume node with full body candles, minimum target is the 382 anchored VWAP. This is target 1. Target 2 would be this supply imbalance. Target 3 would be the golden pocket because there's an imbalance right here above it. So I would just target the golden pocket. To the downside, if we lose this high volume node, First target is the 786. Second target is swing failure into the 2-day. And then I don't even think I would target the 786. I would more so target the naked daily. You could also just pay attention there, but I wouldn't really. So I'll keep these so we can see, you know, kind of what happened after the stream ended. And I'll pull it open on the next stream that we do. I think that was a good session though. Did all the top-down analysis. Alright guys.